Hey friends, tax season is coming. I've got you covered with a 12-episode Saturday series running January through April. Each week, I'll share tips to help small business owners avoid tax season stress, get clarity, and lighten the load by delegating what you don't need to carry. Tune in every Saturday and step into tax season with confidence.
That big job you just landed, the one with the impressive invoice, it might actually be killing your business financially. And worse, it's probably setting you up for tax disaster. I know that sounds impossible. How can a large financial project be bad for business? But here's the uncomfortable truth. Not all revenue is good revenue. Some projects that look amazing on paper are actually profit vampires. And when taxes season hits, you realize you paid taxes on revenue you didn't actually keep as profit because you cannot prove which expenses offset which income. Today, we're exposing the truth about project profitability and why it matters desperately for your taxes. Because until you understand which jobs makes money and can prove it to the IRS, you'll keep overpaying taxes while working yourself to exhaustion. I am Patricia Oholeguy, and this is the Tax Season Saturday. Welcome back. And let me tell you about a web designer who landed a $15,000 website project. Her biggest contracts so far. She was ecstatic, but 6 months later, she was stressed with less money in the bank than before she started. The client required 12 rounds of revisions. There were 47 phone calls that averaged 45 minutes each. She spent about 180 hours total in this project, and that really leaves you about $83 per hour gross, but only $31 per hour after software, stock images, fonts, and plugins. Here's where the tax disaster happened. She reported $15,000 in income on her Schedule C, but she couldn't prove which software subscription, which stock images purchases, or which hours of work belong specifically to this project versus other projects. Her documentation was a mess. Expenses in different credit cards, some personal receipts mixed with business, no project codes in QuickBooks. The result? The IRS only allowed her to deduct a fraction of her actual project cost. She paid taxes on income that didn't actually represent profit because she couldn't prove the connection between specific expenses and the specific revenue. This is the hidden tax cost of poor project tracking. You're not just losing money on unprofitable work, you're paying taxes on phantom profits that don't exist. So how do you track projects in a way that protects your tax position and maximizes legitimate deductions? The first component is income per project with proper documentation. Every project needs its own invoice, its own deposit documentation, and clear payment records. The IRS wants to see which money came from which client for which work. A jumbled mess of deposits labeled client payment won't cut it during an audit. Component number 2, direct costs tracked by projects. These are the golden deductions, costs you can directly tie to a specific revenue. Materials for the Johnson's project, software subscription you bought specifically for the Martinez website, travel to the Anderson job site. The IRS loves these deductions when they're properly documented and assigned to projects. Component number 3, overhead allocation that passes IRS scrutiny. Your rent, insurance, and general software does not disappear just because they're harder to assign, but the IRS requires reasonable allocation methods. You cannot just randomly throw overheads at all projects. You need a defensive system. In our Clarity Compass Method membership every Monday night, We work through the calculations so you have documentation that holds up if you're questioned. Because the worst time to figure out your allocation method is during an audit. The tax benefit of proper project tracking is enormous. When you can show the IRS exactly which expenses produce which income, you maximize legitimacy deductions. When everything's jumbled mess, you lose thousands in deductions you legally deserve because you can't prove the connection. Here's how to actually implement tax compliant project tracking. First thing is to set up project codes in QuickBooks. Every project gets a unique class or project code. Every piece of income gets tagged. Every expense gets assigned. We do this together in Monday night's Clarity Compass sessions. We just don't tell you to set up codes. We screen share and show you exactly where to click for tax compliant tracking. We adapt it to your business so you leave with your actual paperwork implemented. Step 2, track expenses by projects in real time. That quick supply run to the Henderson project? Photograph the receipt. Assign it to the Henderson in QuickBooks immediately. That software you bought for the Chen's website? Tag it to the Chen's the day you purchase it. The IRS wants records, not recreated documentation you cobbled together in April. Step 3, monthly reconciliations, not year-end panic. Review project's profitability month to month to ensure every expense and every piece of income is properly categorized. If you wait until tax season, you've forgotten which supplies went to which job, which mileage was for what client, which portion of the software subscription should be allocated where. And if this sounds overwhelming while you're trying to actually run your own business, that's why our white glove services exists for. We handle all of the project tracking with tax compliance built in from day one. You get monthly reports showing profitability by project and a year-end summary that makes tax preparation simple instead of nightmare. Every deduction is captured, documented, and assigned correctly. Once you have tax compliant project profitability data, everything changes, including your tax bill. When you know certain projects consistently lose money, saying no isn't just good business, it's tax smart. Why pay taxes on revenue that doesn't generate actual profit? Every unprofitable project you take means paying taxes on income you don't get to keep. The second decision is to double down on profitable work and plan estimated taxes accurately. When you identify your most profitable projects, you can pursue more of them and actually calculate estimated taxes on a quarterly basis. You're not guessing at profit margins, you know them. You can set aside the right amount for taxes instead of getting surprised with a massive bill in April. The third decision, adjust pricing with tax implications in mind. Your profitability data shows which work needs higher pricing, but it also shows you which work generates the best after-tax return. A project with lots of deductible expenses might be more tax efficient than the one with fewer write-offs, even at the same gross profit. This isn't about tax avoidance, it's about tax awareness. Understanding which project generates what kind of taxable income lets you make strategic decisions about which work to pursue and how to price it. Right now, today, you're probably working on projects that are costing you money and setting you up for tax overpayment. You're making critical business decisions based on revenue instead of actual profit, and you're losing thousands in legitimate taxes because you can't prove which expenses relate to what income. This isn't complex tax planning that requires a CPA. This is basic project tracking any business owner can learn and implement, and you don't have to figure this out alone. Every Monday at 7 p.m., we meet at the Clarity Compass Method membership to tackle exactly these tracking challenges. We'll help you set up the tax compliance. We'll show you how to document expenses that the IRS accepts and run reports that make tax preparation simple instead of stressful. You can't make it Monday nights and don't want to handle tracking yourself? Our white glove bookkeeping services does everything for you. We track projects meticulously. with the tax compliance built in, analyze profitability monthly, and deliver year-end reports that make tax filing straightforward and maximizing every legitimate deduction. So remember, your most profitable project might be smaller than you think. Your bigger client might be costing you more money and inflating your taxes, but you never know until you start tracking with real data. Thanks for tuning in to Tax Season Saturdays, and I'll see you in the next week's episode. Bye!
Hey, thanks for joining this Saturday's tax season special. Don't forget, you can join the Clarity Compass membership for weekly support or reach out for our white glove bookkeeping services. And remember, we're not lawyers or accountants, just your guide to clarity. Catch the next Saturday episode in this special tax season series. See you then.